At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear!
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha Morgan, growing your wealth. At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear!
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha Morgan, growing your wealth. At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear!
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha Morgan, growing your wealth.
And somebody tell them that. The hostess.
Can you all hear me? Good morning, everyone. Can you all hear me?
I can hear you.
Awesome. Good morning, everyone, and welcome to the 14th edition of Alpha Morgan's quarterly Wealth and Economic Review with Bismarck Rwani. I say welcome back to our regular participants who have consistently stayed with us, and a huge welcome to those joining us for the first time. We're certain that you'll have a great and insightful time with us today. Well, it's the first one this year, so Happy New Year, everyone. I guess Happy New Year is in order. Maybe a blessed and prosperous year for us all. My name is Doyin Anyehe. I'm a director with Alpha Morgan, and I'm glad to be your moderator today as we review the Nigerian economy and the global economy. It's only February, but it's been an eventful couple of months. So many things have happened, and it's like 2025 took off with a bang. There have been positive developments at Alpha Morgan. There's positive outlook for Nigeria with headline inflation rate dropping from 34.8% in December to 24.48% just last month. And then just yesterday at the MPC, the CBN maintained NPR at 27.5%. Exchange rates remains relatively stable and Naira is gradually appreciating against the dollar. So just some good stuff. And on the international scene, we've seen the return of the Mac, Donald Trump, back to office in the US and is shaking the world already, cutting US aid, withdrawing from Paris climate, and so much more. Well, like I said, it's a lot going on, but we have our speaker, the very erudite Bismarck Rwani, Managing Director of Financial Derivatives Company Limited, who's with us to help us make sense of it all. You're welcome, sir. It's always a pleasure to have you with.
Can you start my video? I can't.
What'd you say, sir?
My video said you disabled my video. Can you get
okay, I'll get my people to look at that.
All right.
Yeah. But let me take a moment.
Okay, now it's good.
Thank you. Extend sincere thanks to you for joining us at our January retreat and for the valuable insights and nuggets that you shared as usual. Thank you for being a big brother and a friend of the house. Thank you. In our session today, we'll give a lot of time to Bismarck to review the economic landscape, and we'll take questions after that. So please, participants, type your questions in the Q&A box, and as many questions as we can take will be answered after Bismarck's presentation. Joining us on the webinar today is also George Imade, another director with Alpha Morgan, who will give the vote of thanks, and Ade Buraimo, managing director of Alpha Morgan Bank, who will give us the closing remarks. Well, welcome everyone once again. Let's get right to it. And over to you, sir, Bismarck.
Thank you very much. Good morning. And once again, congratulations in this expansion of your business at a time where everybody's watching carefully. I would like to make a comment that you made a comment about one of the major developments in the last few days, which is that inflation in Nigeria dropped from 34 to 24. My comment is that not all that glitters is gold. So let me start off now by saying our view is that what are the global changes? One thing that is clear is that while there's global connectedness, there's also global disconnection taking place at the same time. There's globalization, there's also isolationism, there's also trade, wider trade, but also tariffs. There's also geopolitical uncertainty, or let me put it this way. Part of it bargaining, part of it strategic, and part of it reaction. But what is clear is that there's a disruption. But also what is clear is that you have what they call a tripartite, which is when a political party in the US controls the White House, controls Congress, and controls the Senate. Typically, what happens in that situation is that during the midterm elections, and you can go back as far as you want, the party in power kind of loses almost everything at that midterm election. And if care is not taken, the correction follows, the correction goes all the way to the White House. It happened during the time of George Bush the second. It happened during the time of Clinton. It also happened during the time of Obama. So that's as far back as my memory can serve me.
Sorry, sir. Sorry to interrupt you.
Yes.
There's a request to increase your mic volume.
Okay,
Yes, sir.
let me, is it clearer now?
Yes, yes.
Okay, all right. So,
Thank you, sir.
one other major development which you have to look out for is what's going to happen on this Sunday. Sunday is the German election. The German economy is the third largest, if I may, in the world. After the US and China, it's Germany and Japan and then India. It's very important because the Germans are right in the epicenter of the Ukraine-Russia crisis. Germany is a major user of gas for heating that comes from Gazprom in Russia. Germany does not have the right to have an army. Germany and Japan were not allowed to have an army after the Second World War. But they've also done a lot. So what does it mean? It means that Germany has a history of being very anti-inflation. The Second World War started because of the inflationary pressures that hit Germany. Germany also has a lot of immigrants, mainly from Turkey and other places. So this will be a true test whether the world wants to go conservative and go right wing, whether the world wants to have tariffs, whether the world wants to stop the expansion of NATO, because this whole thing in Ukraine was NATO was a smaller, what we call a North Atlantic Treaty Organization, smaller body, but expanded and got others to join as much as Poland, US, Slovenia, and all of that. Now they've gone beyond what was the boundary of this former Soviet Union. And so the Russians are fighting defense because they want to restore and defend themselves.
I'm sorry, sir. I'm sorry.
Yes,
Sorry.
you hear
Really
me?
sorry.
Let
Yes,
me
yes.
change. Let me change my network.
Okay.
I want to know whether it's clearer now. Hello.
Yeah,
I can
better,
hear
better.
you.
All right.
Yeah.
Bring the other system. Now, I was trying to put some context into the global situation we are in. Don't forget that in 2024, we had massive elections, and the elections taught incumbents a lesson. In other words, Biden lost, or Biden's party lost. The Conservative Party in England lost. The Indian party in power lost a lot of its majority. The South African majority party also had to share with the. So in almost all cases, we saw a rebellion by the electorate against parties in power, and mainly because of two things. One, cost of living, and two, the fact that when there's an economic crisis, people try to blame it on foreigners and immigrants. So you had immigration and all of that. Now, we are going into a cycle, which, as you can see, and I was giving examples all the way from South Africa to India to Britain, and also most recently in Ghana next door to us. So when will this cycle end? Because, well, there's global cyclicality in economics, there's also global cyclicality in politics. So we are at the threshold now. So many things are happening. And America is the largest economy in the world. The US dollar is the hegemonic and preeminent currency in the world. The US financial system, right, virtually controls the world. Why is it so? It's so because they bore the brunt of the Second World War. They bore the brunt of the Cold War. And this is time to reap from the spoils. Those who suffered, those who, typically in the days of past, if there's a war, he who loses pays reparations to he who wins. So, and that is what happened. So Germany and Japan, of course, we dropped the atomic bombs on them and all of that. But I want you to note something, that Trump is saying that we cannot be, he's a transaction man. We are spending so much in defending global democracy, but we are not getting anything in return. What does he want in return? He wants trade balance, right? He's using tariffs as a negotiating ploy so that people, rather than export to America, will come and invest in America. But the world has since passed that level, and he's trying to go back to the past. But having said that, the first thing we're going to be talking about today is, as the investors, those who are on this call, are going to be asking themselves, did I make money in 2024? And if I made money, why and where did I make money? And what is going to be different between 2025 and 2024? Is the world facing a massive shift in investor perception, tolerance, and risk levels? Is the world changing, facing a changing paradigm of consumer patterns as well? Is there global coordination to make sure that the financial system remains safe and stable? Or is there what we call creative tension, challenging the old order? My view is that challenging the old order will only go so far, that we're going to go back to the basics. But certain trends are there that cannot be changed. That is, there's a neo-colonialist approach. There's a very aggressive dominance posture of the leading countries in the world. So you are going to be having United States, European Union, China, Russia, all of them coming together. And there will be, to a large extent, an oppression of developing economies. Having said that, the reaction to that in the next 3 to 4 years, I'll say 2 years back, particularly, because there are midterm elections by November next year. And then the battle to succeed Trump would have started, and therefore America will not be in a position to do that which we're doing now. So you have an 18-month window in which they're going to do all these crazy things. Now, you as investors have to look at the universal and global markets and say, what is, one, where did I make money and why will it be different? So let's start at the global level. We just said it now. Firstly, the US, if you know what happened throughout 2024, towards the end, the US started cutting rates, and they cut rates quite aggressively. Inflation came down all the way from 11, 10, 9, all the way down to 2.6. Unemployment stable, and global trade increased. The disruption due to the Ukraine-Russian war was there, but the world factored that in. So now, the US economy, all of a sudden, because of Trump's style, we are going to see the US deficit balloon. When the US deficit balloons, and the Federal Reserve Bank has said, we are not going to cut rates anymore. So don't expect a cut in US rates this year. You expect the dollar to strengthen this year. All of these things have implications for your portfolio. So if you made money last year, you made money because the dollar was kind of treading soft water. You made money because the expectation was that interest rates are going to come down globally. You made money last year because you bought your bonds and you bought your equities. So what happens when the US or the Fed refuse to cut rates? Your US equity portfolio is going to come under water. The dollar is going to strengthen. And when the dollar strengthens, the price of gold will come down, but in this case, but also the price of oil begins to come down. So it tells you a lot of things. And that is that's where we are. And I think it was this morning the EIU came up with a clear understanding to say that US monetary easing will halt earlier than in other economies, causing global economic volatility. And the context was clear, and the trigger is clear, and the impact. The impact, they say, is that an extended period of divergence of money policy between the US and the rest of the world will keep the US dollar strong, weigh on valuation of other currencies. Persistent non-US dollar currency weakness would have an impact on prices owing to higher import costs for many markets and lead to challenges in the repayment of US dollar debt. So the question is that how much US dollar debt does your customer or your investee company have? How much US dollar debt does your country have? Right? And how much US dollar debt do you have? That's a big question as an investor. If the case is that is high, like Nigeria said, yes. Nigeria has issued 2 sets of Euro bonds, $2 billion, another $2 billion plus. And therefore, Nigeria is talking about raising additional money. Okay. The big difference between debt and investments is that debt is you borrow and liabilities, investments are there, and you service it with the income in the past. Next. So today we're going to talk about US tariff hikes, and we're going to be talking about geopolitical uncertainties, which I've actually touched on. Then the meaning of AI technology advancement, renewed inflation threats across the world, US monetary easing halts earlier than, right, and moderate global growth. So, like we said, US started easing rates in September, and that was good for everybody. In fact, 2 times, and they were expecting a third one. We think that the cycle will run into 2026, but it will slow down now. But we also believe that the Chinese are playing very carefully and watching the US. Once the US goes into that, within the next 2-3 months, you'll start seeing people in certain parts of the US complaining. For example, KFC, which is the Kentucky Fried Chicken, from the state of Kentucky, I'll move their headquarters from Kentucky to Texas because of tax advantages. So if a company as old and as traditional as Kentucky Fried Chicken can move its headquarters to Texas, and Boeing has moved its headquarters, you are beginning to see changes. And this thing's been a lot. So you investors are going to be asking yourself, how did I perform? How did my portfolio perform in 2024? If you were in Nigeria, your portfolio would have performed to a large extent modestly well. But you would see that maybe banking stocks appreciated or increased in value. You will see that technology stocks stayed flat. In other words, the MTNs and Airtels, and manufacturers also reported massive FX losses. You would see that many of the companies you invested in are having to face energy crisis, faced logistics problems in 2024, and faced higher interest rates. So these companies, so 2 things happened. 1, if you borrowed money to buy the shares. 2, if those companies that you bought into also are borrowing money, you are hit with a high interest cost. The company that you bought into is hit with a high interest cost. And the company that you bought into faced foreign exchange challenges. That was the early part of 2024. As we came towards the end of 2025, we started seeing some changes. Dangote Refinery started. We began to see some changes towards the end of the year. And that affects the performance of those companies, but you will not see those results until 2025, late 2025, when you begin to see the results. So your performance in 2024 will be totally different. The performance of your portfolio, I say, will be totally different from the performance of your portfolio in 2025 going into 2026. But also, Nigeria in 2025 is a political battlefield. It's quite clear that it takes 2 years of politicking to either win or lose an election in Nigeria. So you start counting. If it's 2027, you count back 2 years. And then if it's 2029, you count back 2 years. So the battleground is set and the game is up. And the calculus is different. And it's if you think it's the party structure that you had that fought in 2020, 2019, and 2023, it's not going to be the same. Completely different. So the juggling has started, the meetings have started, and the pieces are being put together. I want you to understand that. Now, what you are seeing here, what you are seeing right now, I hope you are hearing me clearly. Like I said, U.S. policy is going to be more volatile and less conventional.
They still say it's a little faint, so you might have to speak a lot louder.
Louder, okay. So, at one point, I'm going to have to change my system so that it's clearer. Now, so what are we going to see? We're going to see higher consumer prices. We're going to see internal battle. One thing about, let me go back to the US. In 2016, if my memory serves me right, Trump brought a lot of professionals into office, and Trump had to listen. And when between his personal needs and his political ambition, if there was any conflict, he fired the people. But this time when he won, he said, I won on my own speed. So he didn't go for any professionals. He got people who are loyal to him, period, end of story. So the US government, the White House is an extension of the Trump organization. His children, his daughters, and everybody there. So he's running a personal fiefdom. Therefore, in that circumstance, there'll be very few people who can tell him the right thing, right? Because he's become an emperor, a maximum ruler. Now, but therein lies the danger, because the system we run, the system the US runs, is based on Montesquieu's checks and balances, the separation of powers. So they have institutional checks, you have financial checks, and all of that. So it won't take long. Within the first 100 or 200, 150 days of his administration, he'll run into headwinds. And the battle for who to succeed him starts. And that would fragment and dismantle most of the things that you see. 1, 2, the Federal Reserve chairman is not about to leave until his term expires February 2026. So Trump cannot do anything to him. But Trump was the one that nominated. So Trump will have to be thinking of who to take over from him. And by February 2026, there'll be enough battle within the Senate for confirmation that he will have difficulty just picking what I call a yeoman, somebody, a journeyman. So if that is the case and the Fed remains totally independent and autonomous, we expect to see financial system stability in America in this year. Okay. We also expect to see that his journeymen are not going to be able to do that much. And his influence is a declining function of time. Every day that passes, Trump's influence begins to decline because of institutional checks and balances and the battle for succeeding him. So he becomes very quickly, he goes from being a lame duck to a dead duck very quickly. And his opponents, the whole thing that Russia, we don't know what Russia is up to, but definitely he has an arrangement with Russia. And the Chinese they're playing a long game. So the battles are going to be seen more in global financial stability, going to be seen more in artificial intelligence, AI. We are going to see a lot of the fintechs that have been very successful stagger and suffer. So many people are sitting in this audience are saying, oh, fintech is a new thing. No, it's actually the whole thing. So I think that we are going to be seeing this this trend of the global markets, and you will see that if, for example, you invested in NVIDIA a year ago or 18 months ago, I think NVIDIA had more, and they gave a lot of stocks to their staff, stock options. They have more millionaires in NVIDIA than the whole state in the United States. Everybody in NVIDIA was, even from the messengers are all millionaires. Now, what happened? DeepSeek comes in, and NVIDIA stocks lose over $1 trillion in 1 week, lost another $500 billion. And so those millionaires, those overnight millionaires have now actually become, they are still millionaires, but they're not as rich as they thought they were. Many of them actually borrowed against their stocks. Many of them did not sell their stocks. And many people on this call today also bought NVIDIA and thought they were very rich. But like I said at the beginning of this call, not all that glitters is gold. So bear that in mind. So your portfolio diversification strategy and looking at the future, thinking that what goes up will continue to go up and what goes down will stay down all the time. That's a fundamental philosophy in investment, which makes you what rewards the man who thinks differently. Always believe in real estate. We say that a winner is a man who plans for when he loses, and a loser is a man who plans for only when he wins. I repeat, and the philosophy is very clear. A winner is a man who plans for when he loses, and a loser is a man who plans for only when he wins. Please take note of that. Warren Buffett also said that rule number 1, do not lose money. Rule number 2 is do not forget rule number 1. Okay? So I want you to understand that. So we see a situation where people are going to be, we made a lot of assumptions, and I'll bring it back to your Nigerian portfolio, where everybody made up their mind. As I was coming this morning, I saw long queues again in petrol station, MRS. And the difference between MRS and the Mobil down the road is 925 naira per liter versus 970 naira per liter. So it's about almost 50 naira per liter. For a car that has 50 liters or 60 liters, it means a difference of 10,000 naira a month, 2,500 naira a week to fill your tank. So it changes the picture, whether you are buying MRS or whether you are buying Mobil. It changes the picture, whether you are buying Dangote Refinery or whether you are buying NNPC in the stock market. So I'm just preparing now. So you heard about tariffs and the domino effect of tariffs. What it does mean is that, let me put it to you, that if there is a tariff on steel, importation of steel in America, which America feels very strongly about. First of all, they blocked Nippon Steel from buying, what do you call this company? The US Steel Company. Now, by doing that, it means that the Chinese and others and the Japanese will have more, there'll be excess steel outside America and shortage of steel inside America, which means that in the short run, the price of steel will drop. And if the price of steel drops, you will find out that the price of steel drops and it can bring down construction costs in Nigeria for a short run until, because the Japanese and others will counter, but eventually it means that in the short run, the disruption will could lead to lower prices before the adjustment and higher prices. So I think that we need to get, just 1 minute, I'm just changing my system. Can you get me now?
Yes, yes, that's loud. That's clear.
Okay. Slideshow. Okay, is it better now?
Yes, it's much better.
Yeah.
Very well. Better.
Okay.
Much-
Yeah.
yeah.
All right. So there we go. Now so enough of Trump and China fighting back because we know what it means. But what it does mean is that in having your balanced portfolio, it's just like the jackpot syndrome, people jumping out of Nigeria, and many of them are jumping back. I give you an example. Last week, the British announced something which was very interesting. VAT on education. Okay, and VAT is about 18% per annum. So if, for example, your school fees was £10,000, right? All of a sudden, your school fees is now £12,000. Or if your child goes to a private school. So there's almost a 20% increase in the fees. So when people jumped out of Nigeria going to England, they didn't know that will happen. Why is the Labour Party doing it? Labour Party is party of the people, so they want to use the tax on those who go to private schools to fund the public schools. So the same thing, the next thing they're going to do, tax on private medical bills to fund. So the basic assumptions that drove people's decisions have changed and will change further. And like Warren Buffett said, the trend must be your friend. So let's be clear. 1, as individuals, 2, as investors, and 3, as nationals, this is going to happen. So what are the things that are very clear to us? 1, the Ukraine-Russian war will come to a precipitous truce. NATO will fight, but cannot do much because the US and Russia and Saudi Arabia coming together will put the rest of the world under pressure. Commodity prices, Trump is not going to talk too much about baby drill anymore. He's going to be talking about how to keep the Russian, Saudi Arabians happy. Therefore, he would see some oil price. The oil price will not drop as sharply as he wanted. But at the same time, because it's going to be under pressure, because the inflation went up in the US to 3%, it's likely to maybe creep up a little bit to 3.1, 3.2. Once that starts happening, the polls begin to show that Trump's favorable rating is beginning to decline. 1, 2, the stock market in the US begin to factor in an increase in interest rates, which means that equities begin to come down. And Trump looks at only 2 things. He looks at his Twitter handle and he looks at the stock market value of his investment. He thinks of nothing else, right? Of course, that's all he does as a gambler. So you will see that and he will begin to respond, right? And therefore, the only thing that can save him is if the price of oil comes down. And that's where it becomes very tricky for Nigeria. If they have to push the price of oil down, no, let me take it back a bit. First and foremost, because interest rates increase, then your mortgage rates increase. And one thing Americans and everybody in Europe doesn't want is to pay higher mortgage rates, to pay higher for your petrol, and to pay higher bills. So we are going to be seeing this change very quickly at the end of the first quarter of 2025. So don't bet. What you see is not everything that looks, that glitters is gold. So we will see slowdown in Ukraine. We will see Gaza thing. I think there was an attack and killed somebody on ISWAP yesterday. So that I'm trying to show that just like Obama was able to take out Osama bin Laden, that America is going to be going after. You are going to be seeing Israel. I think that Israel and Gaza. The whole Gaza situation is not going to be acceptable. I think the Middle East is going to stand up and say no. The very pro-Israel policy stance of the US will roil a lot of the North American and Middle East. So that's where we see. Then the whole idea of BRICS and the question that anybody who is talking about de-dollarization is an enemy of the US, you will see part of that. And that, again, because the US interest rates are increasing, because the dollar is strengthening, this will even strengthen the dollar further. Sure, but the disadvantage of a strong dollar is that America will begin to import more and export less because American products become more expensive. So if you look at it, there's a contradiction between short-term and long-term policy objectives. But again, the mentality of somebody who was born and bred in a casino, that everything is the mentality of a gambler is you can't so that's what's going to happen. Now let's go back. Let's go to Nigeria. The implication of this on Nigeria: global trade tensions, retaliatory tariffs, reduced global trade may weaken demand for Nigeria's crude oil, but not necessarily. We are doing 1.5 million barrels. OPEC will come under pressure. OPEC as a cartel has two aims: one, control output and control price. But since they're only about 29 to 30% of global, they have the share of oil production, their leverage is not that much. So that's why OPEC is now depending to a large extent on what they call OPEC Plus, which is Russia and Saudi Arabia dictating. But now Russia and Saudi Arabia are in bed with the United States. So if you have a cartel, a production cartel, which is in bed with a consumption cartel, so you are no longer, your interests are conflicted because you are making geopolitical moves and the others are making economic moves. Okay, so I want you to please note that in geopolitics, there are no permanent friends, there are permanent interests. So also another thing that is very important that you must note is what's happening in West Africa. Two things that are important that's happening in West Africa is that the influence of the French in West Africa declining. The influence of the French in Europe is also declining. History tells us, and that history has told us for the past 400 to 500 years, that there's never a time when there's a strong Germany and a strong France. Every time France is in strength, Germany is weak. Every time Germany is in strength, France is weak. And look at it, history is, the records are there. Now, but for the first time, France and Germany are weak. They used to call one of them sick man of Europe. So that's a very unusual confluence. So Germany and France are weak. And Britain is also, so Europe as a whole is under threat. So we have 3 countries in West Africa that are under military rule who have left ECOWAS, so to speak. I think just this morning I read there that Nigeria has approved a 5-year military transition to democracy. That is precisely what Nigeria and others don't want. We don't want a military government. We don't want, and not 5 years. You don't need 5 years to do any transition. But it is what it is. We have to watch. Nigeria is the epicenter and the nucleus of economic activity in West Africa. Nigeria, as it were, will be supplying petrol, diesel, and others to the whole of West Africa. Nigeria produces and supplies the bulk of the cement that is used across West Africa. Nigerian trade covers almost the whole of West Africa. Nigerian Airlines flying across West Africa. So Nigeria cannot have a West Africa that is in trouble. The French troops have all been asked to leave West Africa. And if you take West Africa, the strongest economies in West Africa, now, if I add Cameroon is not Cameroon is considered part of Central Africa. So Cameroon has a 95-year-old president who wants to contest again. Benin Republic is neither here nor there. So, and Togo, right? Ghana has just had an opposition takeover. Ivory Coast, Alassane Ouattara wants to contest, but the other guy from Credit Suisse also. So we have some question marks about the political stability in West Africa and can spill over into countries. So we have to keep our eyes on that. Also, as an investor, you must begin to invest in companies that have West African footprints. So we like Dangote Cement, we like Dangote Food. We think that Guinness just sold their interest in Nigeria to Tolerant and sold their interest in Ghana as well. So they're now doing contract production and all that. And we're focusing on being a spirit company rather than a brewing company. We are going to be seeing initial moves by Nestle. Nestle is one of the most highly priced stocks in the Nigerian Stock Exchange, and they've invested significantly. Okay, so we'll be looking at that. We'll be looking at some interesting palm oil companies. So if I delve and conclude with what's going to happen in Nigeria, we'd like to see foreign direct investment in Nigeria, in sub-Saharan Africa. If I may, sub-Saharan Africa has probably about a $2 trillion economy, 2% of global GDP, 2% or less of global exports. Because of AI, a lot of people are living in Africa and working through using technology. Africa is projected to grow by 4.2% compared with global growth of 3.2%. And we think that Nigeria is also going to be growing at about 4% or slightly higher. So the Chinese have their Belt and Road Initiative. So whilst the Americans are hopping in South Africa and BRICS, the Chinese are beginning to they are playing a long game. So two things that will happen. One is AGOA, the African Growth and Opportunity Act, where America is going to be looking at every country to say, okay, Nigeria, you do $8 billion from us. So how much you're buying $8 million, but you have to sell something. But also, Nigeria will have to leverage one, to be a source of political and security stability, and also to ensure that we remain neutral in geopolitics. So apart from South Africa is an integrated, multiracial society. They benefit from the AGOA Act. They also benefit from the African Continental Free Trade Agreement. So South Africa is going to have a lot of investment. Don't forget that even Elon Musk, who is the unofficial president of the United States, is of South African origin. So those are the things that you have to bear in mind. So Nigeria, let us look at Nigeria's relationship with other African countries. Nigeria and South Africa have a kind of co-opetition, right? Nigeria and Ghana have co-opetition as well. Nigeria and Ivory Coast, okay, Nigeria is just finishing his term as the president of the African Development Bank, and I don't think the Nigerian will get that job again for the next 100 years or something. So what are we going to do? Ngozi Okonjo-Iweala said that the African Development Bank has $70 billion of funds that can be deployed. $70 billion will not move the infrastructure deficit of Africa is more than $1 trillion. So $70 billion is not up to 1/10 of it. So the African Development Bank and the multilaterals need more money, need more capital, and need more resources. So I want you to bear that in mind. But if we must achieve our goals of becoming a $1 trillion economy, we have to do some things differently from what we know. So what's the state of the Nigerian economy? Just very clear. The economy, some things are changing. We are roughly at about $300 billion of GDP. After rebasing, we'll probably come out at about $500 billion. We are going to be growing at about almost 4% with some luck because of some stability in the foreign exchange market and some changes to the profile. So, but Nigeria used to be almost 22% of the GDP of Africa, is now down to about 13%. Nigeria used to be a dominant player across, because there were only about 3 or 4 oil-producing countries in Africa at that time. Now we are one of, God knows how many. We're number 6 in the world in those days, and major player in OPEC. As a matter of fact, I think 2 or 3 times the OPEC Secretary General have been Nigerians. In other words, we've had Lukman as Secretary General, and we've had Barkindo. Now, so what are recent developments? MPC maintained status quo yesterday. Inflation is down, rebasing 24%. Petrol price is at $9.25, but again, we think that will change. The telecom hike is, if I'm right, was 60%, right? 50, right? Okay, 50% increase in, right? They asked for 100 and they got 50, I think. Money supply growth was at 17.3%. Don't forget that this was as high as 50%, but even 17% is more than a target for money supply growth is usually about, I think, about 15%. The Naira has been hovering around, but again, we think that the Naira will weaken again back to about 1550, 1600 after people are going for the Umrah and all of that. Now, let's look at some of the variables that we see. We see the following. We see GDP growth. I think when they announce it, probably about, typically if your GDP, if you rebase your GDP and it's larger, then your growth is going to be slower. Because it's more difficult to grow when you are big than when you're small. Law of big numbers. So the output, the increase in output, because the base figure is big, means that the way to see it is that a child of 1 or 2 changes. You buy shoes for them every 6 months, and they eat only a feeding bottle every day, whilst a child of 10 eats a lot, and you change that child's clothes every 2 years, and a child of 20 can eat all he wants and will not put up 1 inch. His child of 6 months will grow 6 inches, right? While a child of 6 years will grow 1 inch in a year. So we call that the law of big numbers. So if your GDP is now ostensibly $500 billion, to achieve 1% growth, you have to grow by 1% of $500 billion, as against when it was $300 billion. But again, that's another. The exchange rate, we think there'll be some stability. So exchange rate has a rate, and exchange rate volatility as the movement of the exchange rate is another issue. We think that for now, we go to 1,500. But don't forget, by this time last year, the exchange rate was 1910. Then we moved the interest rates up by 400 basis points, and then it came down. It actually, in April, it got down to about 1,200. So that level of volatility is not healthy, but so we are at about 1,500. But what the central bank has done successfully is to bring some form of transparency and price discovery to the system. So if you remove that speculative demand or reduce it, then the level of volatility in the exchange rate becomes lower. And if the level of volatility is lower and stability is there, then investors begin to say, okay, yes, we can do business. And if you look at most companies that I look at the numbers, we have seen that with the exchange rate at 1,760, they did better than when we had an supposed exchange rate of 800, and everybody had to go and beg central bank to get money. So there's something to say that if the dollars you want, you can get them when you want them, at what you are going to be more efficient. We see that in spite of the fact that interest rates went up, that the companies are doing better because of the stability. So stability, macroeconomic stability is a major factor in ensuring corporate performance. I think it's clear and the evidence is there for anybody to see. So current account balance, the central bank governor said it yesterday, it's going to be positive, remains positive at $7 billion, all the way down from 3 years ago. Trade balance, again, in Q3 is up, and we expect it to increase. Inflation, we think that if you take away the cosmetic surgery of the rebasing and all of that, we think that 2 to 3% reduction in inflation this year using the old methodology will do the trick. So if we're at about 33 before we go to 30, 28, towards the end of the year, we get to see that. So using old methodology, we could be down to about 25. But I don't think you're going to see 15. That's 15. Using the old method. So we leave that one out. The MPR begins to drop in our judgment. I think the first drop you're going to see is May 19. So, and the best case scenario is May 19, it goes down by 50 basis points from 27.5 to 27. Conservatively, 27.25. But let's play the devil's advocate and say inflation comes down and then they do 1%. 27.5 to 26%, 26.5 is not going to move the needle. It's just going to show direction, right? So we are in a high interest rate environment. A high interest rate environment means that the equities in your portfolio, that you look at treasury bills, and don't forget in the last couple of days, we've seen treasury bill rates drop by about 100 basis points or something like that. So I'm talking to investors on this call. And therefore I expect you, just a minute, okay. So the other thing you need to look at is, so I've talked about treasury bills. We think it goes down to 19. Let us assume that inflation is at about 25 and treasury bills at about 19, and effective rates of 19 is about 22. It means that the difference between inflation and yields has narrowed, and therefore there's an incentive to continue to save. But also it has the danger is that because if treasury bills are giving you maybe 22% return, you will not buy equities, except because the equity price, I can see that MTN is already at about 260 Naira, and that's just because they've increased the tariff by 50%. By the time we get to see the returns and the diesel price has come down, and we see all of this, MTN price will definitely, we think the MTN price begins to go to 350 to 400. And when MTN pays a dividend, then it becomes, so I think that becomes a very interesting thing. So when you look at stock market capitalization, we see it go down, correct, and then begin to go up when profitability begins to kick in. So what are the big takeaways here? Growth is expected to accelerate, still higher than population growth rate. Increase output and productivity. Dangote Refinery changes the balance of power in the downstream sector and to some extent in the upstream. Fuel imports are down. Export to African countries increase. inflation begins to taper, the exchange rate begins to reflect more of a aligned exchange rate with macroeconomic variables. We think that inflation begins to go down and interest rates follow. So first shot, before at least there'll be two or three cuts this year of interest rates as inflation moderates. And once interest rates begin to decline, the equities you hold begin to appreciate in value. One sector that is struggling, and I saw that yesterday in the business day, was about real estate. It would appear that there's a massive increase in supply of real estate, especially in the Lagos metropolis. Office blocks, mixed-use developments, and all that. So, again, you are investors. Real estate is cyclical to a large extent. Once there's a boom, it expands, and once there's a recession, it collapses very quickly. So, at this point in time, replacement cost of real estate is much higher than market values. So it probably makes sense to buy but I think the market will get softer, and then you can start to buy at that time. So real estate, it's a wait and see game, and then begin to buy later. But for equities, look at those companies that have adjusted their pricing, like the telcos, like the discos and gencos, construction and real estate. So those are things we're going to be looking at. The factors that we're going to be looking at, and I've already explained them, so I don't need to go over them: growth, inflation, interest rates, exchange rate, and money supply. If I look at this just off the top of my head, growth is going to be positive, inflation is going to be declining, interest rates will flatline and begin to come down, exchange rate will stabilize, and money supply growth will actually begin to taper. So if I take these 5 variables, I would say the Nigerian economy is where I should be investing in. The only question is what's going to happen to the political process, because 27 minus 2 is 2025. So we are in the heat of a massive political campaign. But the guys who manage the economy know that the economy has to speak. It's always the economy stupid. So I think that you are going to have a very fierce competition for power. And the beauty of a democracy is that strong opposition is good for economics. A one-party state is not good for democracy and economics. So we are going to have a balance of power, and the economy is going to do much better in 26, going on to 27. So Q1 is going to be better than Q4, but Q1, like I said on television yesterday, don't get carried away, don't get excited. There's a lot of work to be done. But these variables here are very important for you from an investor perspective. When you see potential GDP growing, you see real GDP growing, and you see more than anything, total factor productivity positive, and then the PMI also in expansion territory. So that gives us some comfort. So what are the sectors likely to expand and drive the economic activity? Crude oil and natural gas will do well, right? Because the big majors are selling their land and swamp. Banking and financial services, banking is going to struggle, but again, there'll be a tendency towards the smaller. So there's scale economies, but scale economies do not normally work in banking these days. So niche plays, focusing on certain areas of competitive advantage is going to work. So I think, but to the extent that the banking services and financial services they're expanding pretty fast, and everybody has access to financial inclusion and financial literacy. But I think digital penetration is expanding and making banking services more accessible. And but those of you who listened to the central bank governor yesterday, I had to sympathize with him when he was saying that he had to meet every day. They had meetings every day trying to sort out the ATM cash problem. Yes, it's interesting. I like what he was saying, but I also sympathize with him because he did not understand that markets are extremely ruthless. The POS people and all of that have found a niche. They've made it into an enterprise. There's nothing in the world you can do, all right, to stop that. But you just embrace it and let it go, right? The banks have to become much more efficient. The ATMs have to be all over the place. Cash has to be available in massive places. So I see it as a move towards much more efficient markets. And that the velocity of circulation, the settlement system and all of that shows that the Nigerian trading universe, if I may say, is catching up. And there's nothing you can do to guarantee wide margins in any of these. These businesses are high volume, low margin. The PS women and all, they know. And if you like, you can put ATMs anywhere, all over the place. If it is cheaper and more efficient to use the POS, they will use the POS. And the marketplace knows it. So when you see any business which is becoming an enterprise type of business, then you have to look at it and see what's happening. The same thing is happening in construction and developers. I saw that Business Day article yesterday. So tied to interest rates, tied to replacement cost, and tied to power and energy. Again, another thing, band A, band B, and people are now, once the markets enter anywhere and state governments are now generating their own power, you will find that that sector gets reformed. And just like petrol has been reformed because there's competition, so also with power be reformed because there's competition. 1 from solar, 2 from wind, 3 from distribution cost. Another sector that is quite interesting, which is slow, which is agriculture, manufacturing, industrial, and real estate. These sectors are slow, but if the economy begins to get some investment, they begin to grow. Quarrying, air transport, basic metals contracted, and I think they continue to contract in the near term. So, headline inflation, we talked about it. We have the inflation stoking factors. So generally speaking, petrol price down, but it begins to go back up. Why do I say it goes back up? Because of what's happening in our neighboring countries. Inflation will continue to decelerate gradually, and Naira appreciation will slow. We're going to be swinging, generally speaking, at about 1,500. This is just the value of the Naira as well. It's about 26%, 27% undervalued. And this is the money supply growth and interest rate differential, which shows that basically there are 2 things you look at when you look at money supply growth and inflation. You also look at the misery index. So if you assume that the methodology for unemployment is correct, and that we have 4% unemployment, and that you have 25% inflation, that means, generally speaking, 30% of Nigerians are miserable and 70% are happy. But if you take South Africa being like Nigeria, has an unemployment rate of 31.9, and let us say Nigeria's unemployment is 30%. And also we take inflation at about 25. So you now find that the misery index is about 55. But the misery index itself does not mean much. It means if you have 2 increases in the misery index in 2 quarters before an election, then the incumbents are dead. So that's what you're looking at. So this is what we discussed yesterday. NPR, everything stayed the same. And we think that between now and May 19, inflation numbers will come up for February, inflation numbers will come up for March, and inflation numbers will come out for May. So there's enough data for the central bank to make its decision. And that will affect you as investors, you as Alpha Morgan Bank, and you as also wealth managers. So the fiscal environment is very interesting. We've seen massive reform of the tax system. We've seen telecom tariff hike, which really is not, it's not a fiscal, it's a tariff. right? But the federal government collects some part of it. We've seen subsidy reduction, and I understand yesterday that the FAC meetings were postponed. Primarily, what we hear is that the NNPC did not remit any money, so there was technically nothing to share. So, but the meeting has been postponed, so they will have. So, whatever glitch was in the NNPC system, the money is coming. But if there's a shortfall in what is to be shared, then things will change. Because if FAC does not come in, the banks who are expecting FAC and therefore bringing down interest rates will immediately have to send things. So, local government financing, like we said, is a major development. So, the Nigerian government is not increasing the tax rate. The Nigerian government is increasing the level, the tax collection methodology and all of that. So we think that because the tax rates are coming down, even though the governors are against it, we think that you will see more money in the hands of government. VAT increases and exemptions, so you have to weigh out the exemptions are there, but the rates increase. Dividends, withdrawals, and all of that. So there's not much. The basic thing in the fiscal space are two. One, petrol subsidy, and two, the exchange rate mechanism which they use to sell dollars to the federal government. So, generally speaking, stimulus package is over. So what we have is a budget which has now been approved, signed. The president will sign it in today or tomorrow, today or next week, into law. It was sent back for some changes. So if that happens, with that, we will see what we call the Authority to Incur Expenditure, AIEs, will be rolling out. So we are going to see increased government spending, and that could be inflationary. So we go on I've talked about the opportunities. Rebasing doesn't provide an opportunity for you. What it does is that you have to be looking at the sector. So the opportunities for investment is how money is spent and what sectors are going to benefit from the increases and the exchange rate stability. All of these reforms make the economy a much better place. But remember that we are getting closer to equilibrium in all aspects. So generally speaking, from a macroeconomic perspective, the economy is looking much better than what it was. Now, these are just trends to show that you see that treasury bill rates have come down, right? And when treasury bill rates come down and dividend yields stay flat, people begin to go into equities. But right now, it hasn't reached a sweet spot. So if you invest in America, so now first of all, let me start by saying that I would say that a general portfolio do not have more than, you can be long dollars, maybe 30%, Naira, maybe about 20%, 15, 20%. But even within Naira, you take a position in real estate and take a position also in infrastructure funding, because there are a lot of infrastructure funds that are going to be there. I think that in Nigeria, infrastructure investment will give you a much higher return than any other investment in this country. So let me say, for example, if I was to build a bridge between Lekki and some other part, and I'm charging money, and my bridge takes you only 10 minutes to go across my bridge to the other part, rather than going on the public highway, I'll make money. Not just the bridge itself, but if I provide lighting and all of those things, and the government road has no darkness, and your probability of being attacked is higher there. You can see. So one of the investments that I've seen recently that has made a lot of money has been student accommodation, because it's a disaster, right? what you have now. So anybody who is investing in student accommodation, and we've seen a lot of that, has been making money like bandits. So one, tech-heavy portfolio, digital. Two, defensive portfolios, which means that you look at certain things. Infrastructure investment. I'm not one that goes into crypto and I don't invest in what I don't understand. So I would stay away from Bitcoin. But for those who are very young, who have many years to recover what they've lost, they can go into cryptos. So conservative portfolio, don't be too conservative in a changing environment. So you need to be more aggressive. If not, you'll be a dog in a manger. So I say this, digital portfolios. I say this, infrastructure spend. I say this, people providing services to local governments. Right? I say this for agriculture, for processing and storage of agricultural commodities. These are big opportunities. So 2025 will be different because policies have been made. They will have to ensure that those policies work, but also because there's a cost of living crisis, which has become a hardship crisis. And hardship crisis means that people get very nervous and very jittery. 2025 to 2026 is going to be a true test of government's determination to understand what economics is all about. So my colleagues have said gold 10%, Nigerian equities 35%, fixed income 10%, yes, real estate 14%, and treasury bills 20%. Okay, so this is what you see in the portfolio that will give you optimal returns. But I always believe that the US will respond. So I love the US equity markets, especially if you are driving some things. I think it was 2 days ago that Apple announced for the first time, Apple are trying to sell their new phones at $599. No, you never see an Apple phone less than $1,200, $1,400. But now they're doing this thing at $599, which means Apple is changing its strategy. It was high-end, cool phone, but now they're having to fight, and they're focusing on India as against China. That's the other thing. And also, American intelligence. Apple did not commit itself. Apple did not commit itself to NVIDIA chips and all of that. Apple has committed, now has a chance to work with DeepSeek. Apple also did not copy, because Apple is a service company now. So they are a device company in terms of watches and services, but also the American intelligence. And also, I think they've scrapped their alliance with Goldman Sachs and trying to do, because so there's Apple Pay, and so Apple has become an institution. Yes, Steve Jobs was innovative and came up with new iPad, iPhone, iPod, and all of that, iMac. But now that era is over. This is the era of using scale economies to compete. And where will they compete? Apple is still bigger than Samsung, but there's the other providers of generic devices now, like Lenovo and all of this. So Apple is having to rethink its strategy of being a ostentatious, highbrow product, which is bundled together with music and all of that. So we'll see whether the low-cost strategy of the Chinese, what they've used with DeepSeek to fight Facebook and all of that, and how much more, because the Chinese are fighting Tesla, but there are more electric vehicles made by the Chinese than Tesla in the world. So what's the Chinese strategy? And I want to end here saying that we are going to be using intellectual property theft. We're going to be using competitive devaluation of our currency, and we're going to undercut you in cost. That's what it is. So again, the Chinese civilization is 4,000 years old. And so they are now $18 trillion GDP size. Don't write off the Chinese at all. So these are all the things. Now the outlook. Let me just end up here very carefully. The bank recapitalization process will be a major attraction of capital, but it brings down the price of shares. It makes the banks are going to be much more efficient, competing with the microfinance bank, the money points and OPAs and all of that. We think that the telco sector is going to grow very rapidly and drive productivity. We think that the digital incursion would mean that Huawei and others are going to do a lot more. We believe that telco infrastructure is also going to be broadband connectivity. While it gives us increased productivity, broadband connectivity will give, it also creates massive displacement on employment in the world. We think that jackpot syndrome will be a reverse jackpot, that people are going to be coming back with technology. But so on one hand, Nigeria is building infrastructure. On the other hand, Nigeria is becoming a much more efficient financial market. Those two put together will give it a chance to compete. But the political process itself becomes a major challenge. Okay, so what are the risks? Cyber risks, fraud risks, redundancy risk, obsolescence, risk of oil running out of favor, and then rapid population risk. So you have a demographic risk, and you have an education system that is dysfunctional and not fit for purpose. So there are a number of things that have to be done. So I've talked about banking sector and liquidity management and so on. And we've talked about the risk of political instability, high public debt, policy risk, insecurity, and social unrest. In conclusion, sir, Nigeria's real GDP is projected to grow at 3.6, driven by strong manufacturing and Dangote refinery downstream and upstream. Inflation will stabilize and begin to moderate. So we are looking at 2026, end of 2025, lower inflation, and 26 much lower inflation. We think that interest rates begin to decline, and we think that productivity begins to increase. Currency in circulation, we will have a much more efficient financial system where digital payments will take over from cash payments. Thank you very much, Mr. Prime.
Thank you, sir. Thank you so much.
Thank you so much.
Yes, sir.
It looks like there's just never enough time to just unpack it all. We have some questions, and I don't know how we're going to do this, but we will just take a couple of them. On the US, at some point you saw a lot of people moving their investments to dollars because of the concern about exchange rates and everything. And then Trump resuming office, the markets love Trump. The markets rallied, even the crypto markets rallied and everything. But how sustainable is it? And then when you put that side by side, what is going on in Nigeria now with real return at about 3%, is that enough for people to rejig their portfolio, not knowing how sustainable this US rally is versus increasing their Nigerian portfolio?
Okay, let me answer that. Trump is what we call a bittersweet pill. Trump comes with disruption. So two things. One is that his immigration policies, and he's playing to into the gallery, deporting people, doing all of these things. On one hand, but Trump is a realist. And he, after all the posturing, he will now see that economics, the markets run everything, and that he has no control whatsoever over the Federal Reserve for now. He has no control over inflation. He can say what he likes, right? The market determines where prices are. This is a free market economy. America cannot be a price controlled economy. So in a free market economy, it's the force of demand and supply that determine prices, the invisible hand. So what are we going to see? Once Trump begins to see inflation increase, once Trump sees that Federal Reserve is increasing interest rates and people begin to complain, he has to change that. But in the short run, in the next 2-3 months, it means something to us. The Nigerian government, yesterday I spoke about the level of debt, but the debt you've raised is not as important as the interest rate on the debt. When the interest starts to be a burden, right, high borrowing costs, both as companies and as the governments. And I tell you for free that you see those forward commitments, which everybody's talking about, and the pressure on the central bank come and pay this one. How did forward commitments arise? There are people that were importing petrol and importing products who use their partners to fund the transactions. And the goods came into Nigeria even before the M-form. So when the federal central bank was looking at it, the central bank said, no, these are not legitimate transactions. And when those people stopped funding the Nigerian suppliers, it created a crisis in this country. Now the central bank has paid those monies. Central bank has actually borrowed money. Federal government has borrowed to pay this. The high borrowing cost, both of the government, the high borrowing cost of the companies that have gone to raise money to meet these obligations, and the dollar value means that that is the downside of the Trump policies right now for us. Well, what we are borrowed. Nigeria will not default, I can assure you on that. There's enough resources to make sure that we meet our obligations. But Nigeria will struggle. Every time you put money in, or you go and refinance to repay those whom you borrowed from, your debt is increasing. Your interest expense is increasing. And when you pay for that, you have less to spend on hospitals, roads, and others. So what it does mean, there's an opportunity for government to sell their interest in some areas, right? And improve service and reduce government expense. So you see, very interestingly, you'll see that all the governments, the recent appointments of governments, boards have been privatized almost all these companies. So party stalwarts are being appointed to be chairman of medical centers. If it has got to a point where people are struggling to be on university councils so that the university can award contracts. So if it has got to that level, it means that government as a dominant player in the macroeconomic activity of a country is dropping. So the question was about Trump, and I said yes, that borrowing costs both for public and private sectors, but also that the government, how to manage government finance will become an issue in 2025, and that will fit into the political process. And you, the financial institutions, especially you are a bank, is a financial intermediary, a wealth manager who is providing private sector funding, have to look at everything together. Where am I going to put my money? Am I going to put my money in Series A, B, C bonds issued by Dangote or MTN? Am I going to put my money in the bond issued by the federal government? Right? Am I going to put my money in the treasury bill? Am I going to put my money in the PPP project? Because I hear they are launching, is it today they're launching the new Lagos to Abuja rail or Lagos to Kano rail bullet train. I think I heard it somewhere. A bullet train that will should take you 3 or 4 hours to go from Lagos by train to Kano. In our dreams, for now. Right? Because I have not gone on the Lagos Ibadan train, but the Lagos Ibadan rail, I think, takes about 2 hours. Yeah, okay, 2.5 hours, and that's 100 kilometers, right? So that should actually be about a 30-minute, 1 hour ride. But anyway, so but that it just tells you, if the federal government is going to sell the Lagos Ibadan rail to somebody and you buy it, you know, that may be a big investment opportunity, but the traffic between Lagos and Ibadan, not human traffic, the goods that go between one and the other will not justify that investment. So I would rather buy the Lagos Ibadan Expressway than buy the rail. Right?
Okay, thank you, sir. Divine has a question. She says, will rebasing the GDP to achieve a lower inflation rate have any real implications on the actual prices of goods? And should we expect any widespread policy change based on this?
Okay, let's not confuse issues. One, rebasing the GDP is GDP measures output, right, of goods and services. Rebase, and then rebase here makes it more current for GDP. That's one. The question of the inflation basket and the different base year are two different things. I think the government made a big mistake by trying to put up the two issues in the market at the same time. So, as if people are not confused enough, you added more confusion to the issue. So, these things are complex enough to understand. They're abstract and complex. Then, when you add other dimensions of complexity to it, it makes it people just say, forget it, I'm not interested. Normally, data should bring about clarity. Clarity means that investors are able to make efficient decisions. But when you achieve the opposite of clarity by making it cloudy, people just say anytime what people don't understand, they will go back to what they understood and forget. They won't touch what it is. And if you notice, most countries, when you redenominate the currency or change the currency, there's always some chaos. People want to use the old things that they understand. So, and that is why we have not introduced up to now, we have not introduced any more. After 1,000 naira, we haven't gone to, there was a plan to introduce a 5,000 naira note. But if you introduce a 5,000 naira note and the minimum wage is 70,000, so you will probably have about, your salary for the month will be about seven pieces of the currency. I think you spend, by the time you spend two, your salary is gone. Anyway, so but I think I want you to understand something. One, let's differentiate between GDP. GDP is an output measure. It measures the quality, the goods and services produced. And if the GDP is large and the population is small, the income per head is high. And the income per head and real income means that people can spend more and an economy could be in a boom era. Item number one. Because we've changed the base year and we use more current data, we could go from 300 billion to 500, maybe $600 billion, but divided by the number of people in the country. Done. Right? What does a big economy do? It means that some people say because the economy is big, there will be scale economies and opportunities. So I come and invest in that market and get things done. Right? Two, rebasing of the consumer price index. This means that every 5 years, normally we change the consumption patterns change. Like the central bank governor made a comment yesterday, and it was a very interesting joke that in the consumer price index, one of the products is black and white television. Okay, I'm not sure. I go around places, but I haven't seen a black and white television in a long time. Anyway, so they've taken that out. They've taken out some other things. Cycle study machine. In those days, before now, before photocopiers, before all that. When you're doing handouts in school, they go and do circles, things and all of that and roll out. We used to have all this movie camera, right? Cine camera. That many things have been overtaken by events. They don't exist anymore, right? Records, this music, all those things, gramophone, record, those things are gone. So yes, the new technology of cameras, which are on the phones, electric vehicles, all sorts of things, Zoom calls, have changed consumption patterns, changed production patterns, and therefore, what it means, technically speaking, because of technology, productivity increases. When productivity increases, output increases. If money supply is being managed at the same time, it means that inflation naturally should begin to reduce, right? But the other side of it is that if what is increasing productivity are things that are displacing people, right? Then you have displacement effect, all this frictional unemployment and things that mean that, so you have to absorb those people quickly into this workforce, and then they produce. What happens in the end? I don't know, because you've seen the United States become a service economy. You've seen the big struggle today between rural America and urban America. You've seen the distinction between digital America and analog America. And we've seen that happen between the Democrats and the Republicans in the election. Because the Democrats were still talking about the digital economy, while Trump and others were talking about the rural economy and saying that it was foreigners that caused all these problems. Now, so I bring it back to the fact that we should think about what's going to happen here. Dangote's refinery was a major disruptor. By this time last year, people were carrying jerry cans in front of petrol stations. People were importing petrol and kerosene and all that. But since Dangote started, we are now seeing queues between where petrol is expensive to where it is cheap. It's a different ballgame. So I think that as we look forward into 2025, every month is going to bring a new surprise. 2 years ago, nobody knew OPay and MoneyPoint. And somebody was telling, yesterday we were at an event, and somebody said, oh yes, it was our channels. I said that when they said the guy had something and he tried to buy something from the POS, and while one was failing, the traditional, the other one, the MoneyPoint did not fail. It was instantaneous. And the POS women know it. They said, don't bother, just So it's a different dispensation we are in. We are one, the customer is king, and two, the market is the disciplinarian. Just bear that in mind. Bear that in mind. You cannot give the market what the market doesn't want.
Thank you, sir. I'm going to combine the last two questions because there's a couple of questions here about this POS issue. So if the banks put more money in the ATM, or rather, people have limited amounts they can withdraw from the ATM, right? But then there is the POS operators who are doling out cash. Somebody here is wondering, with the increased withdrawal charge by CBN, won't that have a negative impact on their operator, on their business? But to add to that, doesn't this counter the cashless policy that the CBN was trying to drive, with POS operators increasingly, doling out this cash? And then secondly, the last question I wanted to ask was, you made reference to the Japa syndrome reversing, right? There's a new phenomenon, Dirty December, where both Nigerians and foreigners are coming to Nigeria in December, and there's this whole buzz. How can the country cash in on that? to improve our, FX inflows and all of that.
So let me take the PS thing. The thing is that in efficient markets, and we'll come back to the 30%. In efficient markets, right? You have to understand what is money. Money is what money can buy. And money as a medium of exchange, driven by transactions, precautionary and speculative motives. And if I can get value, if I can pay you and get my goods from you efficiently, why must I carry cash? So total cash in circulation is not up to 5 or 4% of total money supply. So you can imagine there are thousands of transactions taking place, which are not cash. If we are talking about 1 trillion or 1 quadrillion or whatever they call it of transactions in an economy like this, and where the velocity of circulation is turning around, whether they increase ATM charges, whether they put cash in the ATMs, people are using what is most convenient for them, and what is more not just convenient in terms of service, but price. So they've done the calculation. These people are much more efficient than you and I. I tell you something, the biggest traders in the dealing room in a treasury are not as efficient as the BDC boys outside there. They know everything. The POS women are much more efficient than anything else. They've done their factoring and their pricing in it, right? They know cash, they know the difference between one, and they know the charges. The day you increase the charges, they increase their own price. So just let the market will determine what it is. Don't try and game it. You can put ATMs everywhere if it's too much trouble and the charge, after the first 5 charges, then 3 payments, you pay 100 naira, or 100 plus 500. That's all nonsense. The reality is that just as the people who are selling petrol in jerry cans outside the petrol station disappeared, right? So also, what is happening? The people in the petrol station are buying cash, taking cash and selling to the POS women and getting the commission on it. The people in supermarkets are selling cash to the POS women, getting commission. The bank managers are selling their own cash to their own agents who are their peers. So, like every market, the enterprise will get its way, it will settle somewhere. I think that's the important thing. The migration, the goal wasn't financial inclusion. The goal was to in the cashless policy wasn't the goal. The goal was to increase the efficiency of the payment system. Because the more efficient payment system, the more inefficient the payment system, the more you pay interest on money that your own money, which you cannot get across to the person. So you are borrowing money to do that. But if you can settle your transaction instantaneously, so and you won't believe it that Nigeria, Kenya, and some of these countries have a much more efficient payment system than many of the advanced economies. They don't use cash. Everything is settled. But the Nigerian system, after Emefiele did this change of color of currency, this is the only country where you have two legal tender running side by side at the same time. It has never happened before. But the Nigerian system has found a way around it, and everybody is happy and they're doing whatever they want to do. Right? I have never used the POS, and I don't know what they do, but I hear about it, and the people that use it are very happy. And it's at the bottom of the pyramid for that matter. And those are the transactions that people are using. So I think that is clear. So let's accept that has come to stay and give them their needs. They will do it. There's somebody asking the Central Bank governor yesterday about rural areas, financial inclusion, and all that. Look, the rural areas are settling their transactions efficiently and paying a price for it, right? Secondly, you said something about Dirty December. Well, you see, the weaker the value of your currency in the market, the more attractive your market is for all these things. So it is cheaper. A man who has dollars, who was getting 800 naira for $1 before he's not getting 1,500. So it's likely to come back to come and share in all of this. At the same time, the people that were 5, 6 years ago, you could get any artist to come and play for you for 3, 4, 5 million naira. Today, you can't even get the man who's you know, the talking drum, you can't even get any of them. You can't even get a makeup, the person who make up the woman to come on stage. They're talking 100,000 naira to make up the artist. They haven't, then the hair person will do the hair, the other person will do this. So if all of this is to get the person on stage, how much will you pay for the act on stage? So those guys are making, all right. I remember many years ago, Tiwa Savage used to charge 1 million naira per minute, for 15 minutes of halftime. So now it's much more than that. Ashaka is charging quite a bundle for whatever it is, terms, and they are getting more recognition than than people are getting GCON and GCFR, right? And so I see it in 2 ways. One, adjustment of the currency. 2, the service sector, because of the desperation to earn dollars and targeting the outside market. So Nollywood, creative art, early stage artists and all of that. And what we don't understand is that the value chain for entertainment is such a wide and long value chain. From I just told you about the person who is making up the artist, the person making her hair, the person making her face. Then the lyricist who writes the song, right? The producer, the director. I was listening to RMD Damager talking yesterday, and you'll be amazed how many people are between when does the music director, the radio station that will hear it, because if nobody listens to it, right? It's all the way down, and so many, and you can't do it if those acts are not there. But even when they had their award show here, and they had Flavor, the guys who put the music system together charged almost 100 million naira. Because Flavor comes to sing in this room now without any music. His voice will just be as bad as mine, right? So, but if you put the sound system out there, even I will begin to sound like like somebody with some skill there. So you are only as good as the infrastructure that provides. So my answer is 30 December is a stage in that, because before now, the Ghanaians had what they call Africa Logic or something, some thing where they did that December thing. So Nigeria is not catching on. What was interesting was that in this December, we had less incidents of kidnap and ransom than the previous year. So that's one item. Also, when I read the data, I don't know how reliable the data, that people did not go to the Southeast because Southeast is the home of kidnap and ransom. So the big Dirty December thing was in Lagos and the other areas where there's safety. All right. And so that becomes an issue for Southeast politics, what they're going to do about and IPOB and all the other things. So again, so when you look at it now, is there a business opportunity in this? Yes, the business opportunity, and you go back to what Cardoso was saying yesterday, that he has spent a lot of time trying to ensure that the IMTOs and that the monies that are being brought in, and that he's hoping, he said this very clearly, that once this system is in place, and the Davidos and the Burna Boys and Remas can now decide to invest their money in Nigeria rather than keep it in the hands of all sorts of sharks that are out there. That increased flow of money will provide a major cushion to support this currency, because you refer to the whole idea of the balance of payments and the reserves. It was going somewhere, which in this question of 30 December means that 1, 30 December is good because the currency has become weak and therefore bringing money. 30 December is good because the creative art industry has done some things and people are coming back home to come and see these artists. 30 December is a phenomenon which is also a function of local domestic security, and then becomes a big place. So it's going to be 30 December, 30 April, 30 whatever it is, but it's a major thing with that. It's showcasing the creative art industry, the movie industry, and the entire value chain, because Nigeria has the talent across it, right? So I think that to me, that the economics of the creative industry is important, and the specialization that goes into the different segments and pockets of this whole process.
All right. Thank you, sir. Thank you. It's
Last
I
question.
can't. Oh, I should give you one last one.
Yes.
Okay, the last one, the very last one. But before I ask this question, I'm just going to throw this in here for our participants. You know, at the beginning of the session, I said there were positive developments in Alpha Morgan, and which obviously is the commencement of Alpha Morgan Bank. And so we're going to be reaching out to every one of you after this webinar to onboard you to Alpha Morgan Bank, and we hope that you receive us with open arms. And obviously, as we pledge to be a satisfying and an efficient financial services provider to you. So we'll be reaching out to you right after this this webinar. The last question I was going to ask you, sir, is from APT Securities and Funds. And the question is, while rebasing can provide a more accurate representation of value, it also carries several risks. So could you please speak to the attendance associated with market volatility as well as benchmark in the financial markets? And that is our very last question.
Yes, I don't know what the risks are, as far as I know. The only risk I know is that if I tell you data integrity, see, a few years ago, Nigeria went to play football in what they call the under-16. They have different categories. The long and short of it, we were financial advisors to the Nigerian Football Federation. Turns out that some people said they were 16. In fact, one of the people that said I was 16 was around 28, right? Because they had tests that they did eventually. They knocked up almost all our people. So much so now that nobody believes, so they're not subjected. I'm saying that the data integrity has a reputation risk for a country. And therefore, when you now say that your GDP is X, and it turns out not to be so, then everything that is associated with it becomes questionable. And the people that are pushing it become questionable. So when you now say, this is my GDP, what happens is that, you see, for every action, there's a reaction. There's somebody else who is at the other end of the transaction in any other part of the world, and they will see it. So it's better to be honest about what you're doing rather than trying to play all sorts of silly games. So we say that we look at it very closely and think that the only risk that we have is the risk that of what we call when people believe their own lies, right? And that's the most dangerous risk. It's good enough to peddle falsehood, but when you begin to believe your own falsehood, then the problem is not just a disorder personality disorder, it becomes, those people need treatment. So we think that the reason why for 4 or 5 days we couldn't announce the CPI, new CPI figures, was people were testing it to ensure that it had integrity, right? And even then, when they announced it, everybody looked at it and said, okay. And the central bank governor said yesterday that we are users of data. We know we don't produce data, and that we are going to be taking it in gradually in small doses. That spoke volumes, right? Because what happened with the unemployment numbers, nobody has, up to today, has quoted those unemployment numbers anywhere. It's so embarrassing that when you get to a point where nobody can quote, when they say, is this the person who you say is 16 years old? Right? And you know, one of them had who said he was 16 or something or 17, was the owner of a commercial boat. So how could they have amassed enough money to own a commercial? Because what happened was that some people, there was an accident in one of the boats, and it turned out that one of those footballers was the owner of the boat. And but you said you were 16. When did you acquire the money to buy the boat and to organize the business and carry passengers onto the garden? So how? So definitely there was inconsistency. So my biggest problem is that I know that we would have the rebased GDP is not going to come out as fast as the CPI, right? And you see, you're going to use some of these things to determine. So why is the FAC? I won't be surprised if some of the data points being used for the FAC threw up some contradiction, which led to chaos, where they couldn't agree on anything. It's okay, let's step it down for now. So I would say that let's be careful. And the last point I will make here is that when we rebased our GDP in 2000, I can't remember when Obasanjo was there. We were smart. We used the old GDP with smaller numbers to get debt relief under the highly indebted poor country initiative. The moment after that, we now rebased. Now Nigeria became a medium income country. Once you're a medium income country, you cannot have access anymore to the other. So that's what happened. And so again, let me use the opportunity to say congratulations to Alpha Morgan Bank and Group and everybody on this webinar. We'll ask you to please patronize the new kid on the block. Thank you.
Thank you, sir. All right, thank you so much, sir. I'll at this point hand over to George for the vote of thanks and then subsequently to our managing director for the closing remarks.
Thank you. Thank you, Doyin. Ladies and gentlemen, you will agree with me, it has been an amazing time, especially when Mr. Bismarck Rewane is in the saddle. I can assure you that Alpha Morgan webinar with Bismarck Rewane anchoring, you will never get it wrong. When you seek for knowledge, seek for opportunity of where to invest, how to invest, and when to invest, you have more than enough information. And that is what this webinar of today has lived up to. Always living up to the billing. On this, we want to thank the Almighty God for making it a reality and making it possible for us to have it as scheduled. And I would like to deeply appreciate our own very Bismarck Rewane for always availing us the opportunity to feed from the fountain of his global knowledge. It's not just of Nigeria, globally, as it was demonstrated today. We saw what he did, saw how he took us around the world. I got some new insight today. Maybe I will share that with you privately, sir. But I can even say it here. I never knew that Japan and Germany don't have their armies. In fact, it came to me as an eye-opener. I'm sure we'll explore conversation around it later. Thank you so much for all this revelation that you always bring to bear in Alpha Morgan webinar. We are so grateful to you for all of this. You never reserve your knowledge. You release it to us graciously. God bless you, sir. And I want to also thank our audience. Every edition is a better today, making it regularly exciting. The various questions, the avalanche of questions, torrent of each or conversation and engagement shows the strength of this webinar, how interested you are. You are our jewel of inestimable value. We appreciate you deeply. Thank you so much, and God bless you. I'd like to especially, let me use this word, gratefully appreciate our Managing Director, Mr. Ade Braimo. All these things we are experiencing today could not have been but for his generosity, for his interest in ensuring and working behind the scene that this webinar comes alive at every time we schedule to do it. In spite of all the tight schedule he has, in view of the banking that is there, we just bettered, he found time to ensure that this program goes. He has one or two other remarks to make in connection with this and many others. I would like to yield the floor to him, and he will finally give the closing remark for this edition to come to a close. Thank you.
Thank you so much, everybody. I'm Ade Braimo. I happen to be the Managing Director of Alpha Bank. I want to thank Almighty God for how far He has taken us. I want to thank everybody, all the governors that work on it, the central bank governors. Thank you so much. This webinar will continue more frequently. We're not going to, we'll add more flavor to it. Please continue to be on alert and continue to send messages to you. Alpha Morgan Bank is starting. I want to thank all of you that supported us. I want you to open an account, as our people will be knocking on your doors. Please open an account and we will support you in our own way. Let us do it together again. May the Lord bless you. Mr. Bismarck, thank you so much. We'll continue to be proud of you. Thank you for all your support. And thank everybody for attending. And thank my colleagues too for what they have done. Thank you. See you in the next seminar, a webinar. Bye-bye.
Thank you, sir. We appreciate you. God bless you, sir.
Bye-bye, everybody.
Bye-bye. Yeah.